This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, I emphasize. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning.
Hi, good morning. We made it. We made it to Friday, another week, and this was a full one. No, it wasn't a full one actually. Monday was off, right?
Monday was off? Yeah, Monday was off, yeah.
But still, guys, thank God it's Friday.
You know, we almost make it sound like we're going to war or something. It's like fighting from all sides.
But did anyone go for the Backstreet Boys concert last night?
I did not. My wife did.
Oh, wow.
Yeah, but...
No.
I'm a big Backstreet Boys fan, but I couldn't.
I'm not sure how I feel about that.
The 90s nostalgia, right?
Oh, absolutely. Well, let's kick off the day with some cues as they stand right now. You have, U.S. stocks which are down again. The question which many are asking is, does it matter? Because the market here over the last couple of days seems to be singing its own song and charting its own path. The S&P is down for the fourth straight session. Day before yesterday, the S&P lost about 0.7%. Last night, it lost another 0.75 of a percentage point. And as I said, 4 days in a row, indices have been lower. The S&P 500 took support at the 50-day moving average, which stands at roughly about 4040, and then bounced off there. That's an important support level to watch. Regional banks in the US are the problem, and that continues to be the problem. So intraday, the regional bank ETF, that fell 9%, it ended about 5.5% lower. Over the last 4 sessions, that index is down 15%, and from the beginning of 2023, it's down almost 40%. And, fears are that this is kind of a slow burn situation, and eventually there will be a broader contagion. Many don't agree. We had, for example, Jahangir Aziz of JP Morgan yesterday who was saying that unlikely. Anyway, but that's the worry. Later today, you get the jobs number out of the US, the non-farm payrolls data. I was saying 2 days back that the half-life of Fed communication in terms of what they're going to do is getting shorter and shorter because, there are so many meetings, first of all, and then between meetings, there is so much data that things can change on the dime. In any case, as per the Fed, they will decide based on data, and it's going to be a meeting-by-meeting decision. There is no forward guidance now, so this assumes importance in that sense. With yesterday's rally here in India, and yesterday was a spectacular move, right? On the Nifty, on the Bank Nifty, mid-cap, small-cap indices ended 1% higher each. We are 1% away on the Bank Nifty from all-time high. On the Nifty, we're about 3.5% away. And if we do get to these levels, I think we will be one of the first large markets to do it, back to all-time highs. So I think interesting and important. And I think those are the targets. You can kind of nitpick here and there between 1%. There are some levels you can put out, but I think the bigger levels are the all-time high levels. On the downside, on the Bank Nifty, on the upside, the 78.6% retracement of the entire fall on the Nifty is 18,450. And on the way down, supports come in at 18,042, which is the low day before yesterday, and 17,960 are support levels, which should be held out. So 18,042 and 17,960 if there is some weakness which emerges. For the Bank Nifty, the all-time high at 44,152 is clearly in sight. On the way down for the Bank Nifty, 43,078 and then 42,603. This is basically the range in which there should be some downside levels and some support should be found as we go along. It's been a spectacular ride. There was just a 1 week pause. Otherwise, it's been 5 weeks of uninterrupted journey. SGX is indicating an open that we've been gotten used to over the last couple of days, neither here nor there, down 30 or 40 odd points. Will we see a repeat of what we had yesterday? Yesterday was slow, steady, but sturdy. All day the market kept moving higher and picked up pace into the close. So that's where we are at. Last day of the week, going into the weekend, with, of course, important data later tonight. Sonia.
Absolutely. Steady but sturdy. I like that. I'm going to use that. I'm going to steal that. But the reason why I asked you all about Backstreet Boys is because there's this song, right? Backstreet's back. Yeah, all right. Yeah. So the Bulls are singing that song, perhaps, right? The Bulls are back. You saw that coming. Okay, so the bulls are back, right? I mean, 18,200 is here. And just a couple of things, as Prashant was also pointing out, the big question that we're asking is, will the Nifty continue to see buy on dips despite a little bit of challenges that's coming from across the globe? That seems like it could be the case for a couple of reasons. There's big buying that's coming from the FI community. In the last 3 trading sessions, FIs have bought to put together about 4,750 crores, which is, almost on an average about 1,200 to 1,400 crores of buying per day. So that has really given some confidence to the market. Apart from that, the earnings season has progressed quite well. In fact, even from the laggards, some of the spaces like two-wheelers where demand has not come back in a big way, over there as well, you're seeing earnings beat, not just from Hero MotoCorp, but from TVS as well. So it just goes to show that perhaps the earnings season is not as bad as what the street would have feared, and that's something that the bulls will definitely like. So both Hero and TVS were a beat. Despite export pressure kicking through, the margins for TVS have been above 10% for the 6th consecutive quarter, so the street would like that. But coming to global cues yet again, as Prashant was saying, so many data points that will come through. The US markets actually have closed lower now for 4 trading sessions, and by the end of this week, the Dow would be down about 3%, which is the weakest close that we've had since since 2 months or so. Once again, renewed fears of a contagion risk from the banking sector. Then, there's also what happens with the Fed now that one rate hike has come through. But all of that could be negotiated if earnings continue to deliver. And in that context, today is a big day. A lot of big numbers coming through. There's Britannia, Marico, Bharat Forge, Federal Bank, Paytm. A lot of non-index large caps that will be reporting their numbers as well. So we'll use all those data points. But, a couple of questions, right? One, whether the market will continue to decouple from the global space and see momentum. And 2, after the run-up that we've seen up until now, is it a good time to perhaps book profits? And that's what the question you're asking.
Well, that's right. Now, Sonia, just to build on the Backstreet Boys point, remember that song, I Want It That Way, right? The bulls want it that way, and they're getting it that way, on a day-to-day basis. So that's been good actually for from a bullish perspective.
Maybe the bulls are all 90s kids, listening to that kind of music, yeah.
I mean, I'm not sure, but on a serious note, today is Budh Purnima as well. So I want to wish all our viewers out there happy Budh Purnima. My son actually made it to school, unfortunately, and the school shut. So he's on his way back.
That's on you, not on him.
That's on me. He told me yesterday, but I thought he was joking. My wife says, just messaged me, he told you and you didn't go with it.
That's not a good Friday for him.
It's a bad Friday evening for me. But let's get back to the markets there. Could it be a good day to book profits? That's the question that we're asking. I think it could be a good day, given the kind of global cues that you have. You've got a big jobs data point that's coming later this evening. And also you have the treatment of the HDFC twins post-merger. There's a bit of a disappointment that's coming in there. And Nuvama, they're pointing out, instead of an inflow, there'll be a mild outflow that could take place. So it could possibly be a good day to take some money off the table, book your profits, have a good time, and then come back next on Monday and see how things goes. Individual stocks, hold on, but on the index, you could take off some money. Yes, it was a super session. Call writers, they got stuck on the wrong side. It was weekly expiry. There's massive institutional buying as well. DIs and FIs put it together. And there was a long build-up that was seen in the Nifty Bank futures as well. The open interest was up close to around 7%, or telling you that there was some long addition out there. What did the FIs do? They added some mild long positioning. And the previous session, they added 8,000 short contracts. But in a day, they were forced to shut off close to 35% of those long positions. So there was some short covering that played out as well. Now I'm looking at the options data. And my sense is this put writing is getting too easy. 18,200, 18,150 between them, it added closer to 75 lakh shares odd. But the 18,200 call, the rough premium out there would be around 150 rupees. It ended at around 128 rupees. So at higher levels, the bears are positioned to defend those levels. Remember, they got stuck on the wrong side yesterday. But I think that 18,300, 18,350, they'll want to defend that mark. The Nifty Bank as well, there was a fair bit of addition in yesterday's trading session. And the PCR now on the Nifty has moved to around 1.34. Now we're moving towards the higher end of the band. So that as well is a bit of a cautious sign that's coming in there. What are the levels you're looking at on the downside? 18,020, 18,050, because we have bounced off those levels, and the options data is telling us that that will be the near-term support. But we are seeing resistance at around 18,250 to around 18,300. Maybe the initial dip that the SGX Nifty is suggesting gets bought into. But I think taking off some money off the table in that resistance zone will be prudent. And the Nifty Bank has led the way. So if you're looking at it, going by the options data, 43,200, 43,300, well, that could be a near-term support zone for the Nifty Bank. So let's see how this goes. But I think enjoy the weekend, take some money off the table, and come back on Monday and let's see how it goes.
All right. Lots to digest, and we'll pick up on some of this as markets start to open. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe, and Abhilash Narayan of Standard Chartered joins in to help us with that. Later, our research team will bring you CNBC-TV18's list of top 10 stocks of the day. At 8:30 this morning, we do a fundamental stock check with Siddharth Kemka of Motilal Oswal Financial Services.
Okay, so let's kickstart the show with some opinion then. First up, we have Amish Shah of Bank of America Securities saying their analysis of the past two recessions, 2001 and 2007, suggests that the S&P fell 20 to 40% after the onset of the recession, and the Nifty mimics S&P, though it falls less. He says global slowdown, volatile commodities, peak urban demand, and slow rural revival are risks for earnings. He expects continued cuts to consensus FY 24-25 earnings growth. He sees no upside to their Nifty year-end target of 18,000 and says they would look to book profits. That said, he says he would advise buying potential market dips, buying the Nifty at 16,000 on strong domestic flows, weak FI positioning, and resilient India macros. Well, the Nifty is well above that, so we've moved beyond that. Now, perhaps you should look to book profits.
All right, well, let's get you some money market views as well. We have Lakshmanan V of Federal Bank, who says the volatility continues to remain low in the rupee with FOMC and ECB actions along expected lines. He says with the dollar index finding support around the 101 levels, market will wait for further cues and clues from the U.S. employment data and domestic inflation. He expects continued forex reserves and oil-related buying to floor gains for the rupee. He expects the pair to trade in a range of between 81.5 to 82.25 to a dollar for the next few trading days.
Okay, and on the bonds, Lakshmanan says that the US Fed indicating a pause, the market has started discounting the possibility of the end of the rate hike cycle. He says domestic yields on anticipated lower inflation continues to drift lower, and the 10-year benchmark bond yield is expected to trade in a range of 6.95 to 7.05% over the next few trading days.
All right, so that's all the market calls as well as the bond market and rupee market calls. But let's run you through the top 10 stocks that we're tracking for you. Hero MotoCorp, TVS Motors, Tata Power, Blue Star, CEAT. Their stocks are on the back of positive news flow. Add in Sundaram Fasteners as well. On the flip side, the HDFC Twins, because of the flash that was up for you on the screen, the MSCI treatment, that one's going to be reacting to negative news flow. Manappuram and United Breweries, all of them will be reacting to negative news flow.
Okay, well, that's basically what we are sort of tracking, and those are stocks which we will discuss in just a bit from now.